Okay, guys, next up, a very interesting topic in the online payments world. We've got Cohen, who's the co-founder and CEO of BridgerPay, and he'll be speaking about payment orchestration and optimization in high-risk industries. So let's give him a round of applause, guys.
Thank you, man. Go. Okay, so, already. Hi, everyone. It's great to be here. My name is Ran. I'm the CEO and co-founder of BridgerPay. We are a payment orchestration platform working globally, multiple verticals, processing a little bit over $50 billion on a yearly basis at this day. First of all, I want to say this expo is the first time I'm speaking in this event. I'm going to events in many places. And this one is organized, wow. I don't know if it's because of your vertical or what you do, but you are very spoiled and you get everything pretty much, so chapeau for the organizers. So we're going to speak today about payment optimization, and payment optimization in the high-risk vertical, which is, let's say, the hardest part or the hardest ever. Hey, Arad, how are you? The hardest ever to do. You could say that high-risk merchants are the most sophisticated today in the world of processing. They are using the highest amount of payment providers, utilizing multiple methods in order to create approved transaction and increase their approval ratio. But they are facing a lot of challenges. So let's go over a little bit on the challenges that merchants are having. Just before that, who is here a payment provider? Who is a merchant that is processing funds? Okay, so let's start. There's a lot of elements within one single transaction, right? Which vertical this transaction is coming from? What amount is this transaction? Is it Amex or Visa or MasterCard? Which MCC code is processing this transaction? Is it going through 3D or not? What is the risk category of that transaction? So many elements that can determine the right, or let's say the optimized route or way to process a single transaction. Over 10,000 different variants that us as human needs to think about and say, okay, that transaction should do this. So many different variables, and in the end, now it doesn't stop. We have network token that is coming in. Obviously, the geographic that you are processing from. So, as well, this is a super important part. When we see merchant and they work with a single payment provider, or when they process with a single payment provider in a specific country or specific region, they could have more, but sometimes we see that in specific regions or some countries, they have one payment provider. One payment provider can bring you as a high-risk industry up to a certain level. Pretty much around the 50%, and you can see it goes up and down between regions. But on an average level, you're going to lose $1 on every dollar you process. Now you could say, okay, we get a lot of refusals that are related to clients doesn't have money in their accounts. It's 40%. Where is the other 60? 60% of your refusals can be rescued. There's a cost. When we process money, we also take under consideration the cost. And the cost is not just a simplified cost. There are many elements of a single transaction. The processing cost that we pay our payment provider, transaction fees, 3D fees, the settlement, the disputes, the chargebacks, each one of them is another line of payment that we need to pay on that transaction. This is also a part of our consideration. When we route a transaction, we want to know that we route a transaction to also the payment provider that has the lowest cost in that specific country with that specific set of variables and to route to those type of payment providers, because in the end, cost is important. We get a lot of frauds, and as high risk, and the high risk you get or go, you will get more and more frauds inside your processing. Scammers that are trying to check different cards, that are trying to deposit different, with the same card in different players and make use of the bonus you give them. Million types of different scammers and use cases that you need to protect yourself from. So when a transaction comes in, what are you checking? Which elements are you checking on this transaction? The historic, the token, where it was used before, how many times it came in the last 5 minutes. All those parameters are obviously very important to route a transaction with the lowest probability to get charged back or disputed later on, which you don't want, obviously, because this will ruin your processing accounts. There are many payment providers in the world. We are connected only to around 1,000. We are adding 6 to 8 a month, and this doesn't stop. We opened Bridger 6 years ago, and we still connect payment providers. It's unbelievable. We thought one day it will finish. But there are thousands of options, and they keep coming. Those payment providers, and each one of them are relying on different gateways, on different technologies, on different API layers. Some of them are coming from legacy technology, some of them are more new and advanced. But you as a business, when you connect to a payment provider, you don't have really any idea how is their API performing, how many times they have a downtime in a month, how many times they have another hic, or when something comes in or change, do they notify you, or just your approval ratio go down? Each one of those payment providers is running a lot of different transactions with different banks behind him, and in the end of the day, you as merchants, you have to be aware of the behavioral issues that affects your business. Suddenly your approval ratio go down. Suddenly you have more transactions decline that you should have from that country in that PSP in that specific time. Those elements can keep you safe from that payment provider that is now not producing, but for sure you need to have others. So in any case, it's not just the relying on one, it's the creation of the perfect mix of payment providers. So when we speak about optimization through an orchestration layer is doing a lot of things, not just technically. It's your payment partner. But more than that, it takes inside everything, the fraud, the 3D, the connection and integration and maintenance of the PSP integration. The usage of network token. Usage of network token, if you use it right, reduce your friction, increase your approval ratio, decrease your processing fees. So usage of different technologies within orchestration is, in the end, what you as business needs. Obviously, the ability to keep all the tokens in a safe environment, in a PCI environment, and as an orchestration needs to fit to any business, because you are running payments, and the same as any online shop that is running payments, and you have the same challenges. Maybe yours are bigger, but you are all using the same orchestration layer that allows you to utilize those tools. Can I have water? So when we start talking about and speaking about optimization, the first thing we should think about is the optimization of a single transaction. How many payment providers do we have that can cater one single transaction? There is no perfect payment provider in the world. We all know that. Thank you. And there is no 100% approval ratio. We all understand that. Now, what do we do with that? We need to harness that knowledge and bring it into a technology that allows us to retry between multiple payment providers, unlimited payment providers. We have clients in high risk with 15 payment providers in the same route, and they still get approved on the 15. So orchestration and starting optimization of your payments need to start with the mix of payment providers. It should also focus on the experience, eliminating everything else that doesn't need to be in your checkout, giving the client the right type of payment method he and his type of persona would use. So optimization is building a route, building the perfect route. This is not a recommendation of payment providers, okay? This is the design team decision. Perfect route is built out of different payment providers that are connected to different acquiring services, acquiring services that are not located maybe in the same place. When you build a mix of a good route, your route, the entire traffic that is coming from that country that is being done here, being processed here, the entire route is approval ratio is going up. And transactions that are going to fail in Nuvei with obviously a soft decline, right? Not because you don't have money in your account, would retry and would retry and would retry until they would get approved. Because the risk appetite of Nuvei and the risk appetite of Payable, for example, is completely different. And each one of them will accept some transaction and the other won't. Building a mix of payment providers is not the only thing you should do. You should also place your rules, your logic, your business logic. When you see that WorldPay or Stripe is processing better transaction above $500, send it there. When you see that multiple cards are being deposited in the same account, you want to stop it. When you are bringing a new payment provider and you want to cap his volume, you want to try it, you want to test it, you want to see how it goes. So cap his volume, and once his volume is reached, he's out of the route. Those automations, those rules can bring you to an optimization. And optimization must be together with monitoring, strong monitoring tools. Monitoring that will show you how much you are processing each day, from where, on which approval ratios. Monitoring that will show you how much you are earning from your retry technology that you have added into your stack. You also want to know who is the best. Who is the best when we place him first on the route? Who is the best when we place him second, and third, and fourth? This is how you can build your perfect route, because you know. And this knowledge is obviously the most important thing in payments. And when you bring and when you want to optimize payments, the first thing you should do is get all the data in one place. Using retry can generate impact, and the impact is crazy. It can go to 30% in some regions and 4 to 5 in others, but retry impact is here. It's immediate. It's on the second transactions you place on any orchestration that is retrying well. Retrying impact increase your approval ratios in a way that obviously once your route is optimized and you can actually get those retry impact, this is changing your business in terms of money and how much you are actually processing from every single batch of transactions. So this is what we see. Again, this is an average, and this is what we see from this type of industries in different places around the world. And yeah, let's move on. So we have great clients. We are working with great clients, big clients, enterprises that are processing in many, many different countries with a bunch of PSPs and methods. So So in each one of them, we are able to create the retry impact that we've discussed, the perfect type of routes, the perfect route of approval ratios in each country that they process. And we do it, like I said, in many, many different verticals. And that's it from now. Thank you. I'm happy to answer questions if you have.